Welcome back for the 12th episode of CBA's Talking Economics with the Commonwealth Bank of Australia's Chief Economist, Stephen Halmarick. Stephen, thanks for joining us.
My pleasure, thank you.
Off the back of the RBA's rate rise earlier this month, what's the latest economic data telling us?
Well, the main data point we've had since the rate rise has actually been the labour market. For the month of May, employment was very strong, up nearly 76,000. The unemployment rate was back down to 3.6%, which is almost the lowest since 1974. And we also have an increase in the participation rate, so more people coming into the labour market. So a very strong employment outcome, so that's good news. We've also seen quite a big increase in the number of net migrants coming into Australia. So over the year ahead, we're expecting around about 400,000 new Australians to arrive. That's up from pre-COVID levels of more like 250,000 per year. So that'll help alleviate some of these stresses in the labour market and provide a bit of extra labour supply.
Of course, the focus continues on inflation. What is happening there?
Well, according to the monthly Consumer Price Index indicator for the month of April, inflation actually accelerated a little bit, up to 6.8% from 6.3% the previous month. And most of the increase was around things like holiday travel and rent, which I'm sure people are experiencing in their daily lives. So that slightly higher inflation number was one of the reasons behind the most recent increase in the cash rate from the Reserve Bank.
Moving on to interest rates, what is the outlook from here?
Well, after pausing in April, the Reserve Bank increased interest rates in May and then again in June. We had expected the May increase, but the June increase came as a bit of a surprise. So the cash rate's now 4.1%. We're expecting at least one more rate hike. Base case is August to take us to 4.35%. But if the next monthly inflation reading is high, there's a risk that they actually raise rates again in July. There's also a risk that they might raise rates again in July and August. So at least one, perhaps two more rate rises to go into August this year. So that would see the cash rate around 4.35%, if not actually at 4.6%.
Stephen, thank you for your time.
My pleasure, thanks.